Good evening, everyone, and welcome. Thank you all for being here this evening. My name is Scott Lurie, founder at F Street, and I am grateful for your time this evening. We are going to be discussing our private debt fund, our PDF, one of our our single longest running fund, a fund I founded and started in 2009. I'm grateful to be here with you this evening. F Street is an alternative investment firm. A little bit about our firm is that we focus on creating and building long-term wealth for our investors through passive alternative investments. We're planting money trees. The money tree was a thing in my household when I was a kid. I always wondered where the money was coming from, and my mom would always tell me out back at the money tree. And that kind of maybe planted my own seed of how do those money trees happen to grow. And we're doing that through alternative investments and specifically in the real estate industry. We focus on three categories. We are only focused in real estate, and we're only focused in these three categories. We make investments in multifamily, we make investments in industrial, and we make investments in the private debt fund that lends money to other real estate investors secured by the first mortgage on a property. Tonight, we are going to be talking mostly about the PDF, but we wanted an opportunity to at least share with you a little bit about F Street and a little bit about our verticals. A little bit about our team. Some of you had a chance to speak to our investor relations team or some of my partners. It is great to have a mighty and growing team. We've got, in my opinion, the best in the business, and we do a great job delivering on our results and our returns. I'm very grateful for our entire team here at F Street. A little bit about our multifamily portfolio. We build ground up. We buy value add. When we're building Class A multifamily. There's a couple projects that we've completed on the left, Tannery Falls, Greenlink Residence, Coast, which is 199 units here in Oak Creek. We just are starting BD2, which is 156 units in Brown Deer, Wisconsin. We just completed an $11 million equity raise there, and we are about to start our second phase in Oak Creek, and we're about to complete a $6.45 million raise there. We do also buy some value add, which you'll see in the corner. We buy a Generation 1 Residence Inn, and we convert those from hotels to multifamily. We've got assets in Wisconsin and Ohio and Illinois, Wisconsin, Ohio, Texas, Jackson, Mississippi, Albany, New York, Tyler, Texas. So we're all over the place, making sure that we're delivering above market returns, and we feel really great about what we're delivering. So a little bit on our multifamily portfolio. About our total development, we have 1,155 units currently already developed at $183 million of value, 2.1 million square feet of industrial, and a little over 600,000 square feet of commercial. We focus, as I said, mostly in the industrial and multifamily categories. But tonight we're here to talk about, F Street's private debt fund. We do have a special guest joining us this evening. An investor we met not so long ago, Todd Myers, with us. And Todd, thank you for being here. We're going to introduce Todd in a little bit. Let Todd share a little bit about his experience with F Street. We met Todd through one of our marketing campaigns. Todd has entrusted us. He's written a unsolicited, beautiful review about his entire experience with F Street, and he'll share a little bit more about his experience with us this evening. So how did this all start? I was a franchisee of HomeVestors, the We Buy Ugly Houses folks. I realized that there was a funding gap of how real estate investors fund deals. And I knew that there was a massive discrepancy between time and execution and traditional fundamental lending. And I knew that that gap was an opportunity for me. And therefore, we started the Hard Money Co. We originally started in Milwaukee Hard Money, and we've evolved into the Hard Money Co. That funding gap really focuses on the traditional lending sources and the requirements that have created such barriers to entry as well as such time delays to get anything closed that we have an opportunity to capitalize on the opportunity of quick, swift underwriting and quick, swift funding. And we do an excellent job executing on that. So high yield private debt fund. What is a high yield private debt fund? It's really simple. We pay 10%. We pay 1/12 of 10% into your account every single month at the end of the business month on the last business day of the month. So you can expect a ACH into your account on the last business day of each month of 1/12 of 10%. We pay this. It's backed by real estate. We distribute these on a monthly basis. And you do have the option to discuss compounding, which we'll discuss. But most, some, all, some. We just released the compounding interest, and Todd actually takes advantage of the compounding interest. But we do have a compounding interest feature that is now available to you. However, a lot of our investors, traditionally, since they've been with us for 5-10 years, are accustomed to the check, and they appreciate that on the last business day. So how do you pay 10%, Scott? Great question. We pay 10% because we charge 15%. We're a short-term lender. We're called a hard money lender. We lend money to real estate investors who are going to use our money for 1 month, 3 months, 6 months, 12 months. Our average loan is on our books for 327 days. So people are borrowing our money and repaying us with an exit strategy of either a fix and flip, which means they're fixing up the property and then they're going to sell it, or they're going to fix it up and they're going to rent it. And those two strategies have two different exits, which culminate to about a 327-day average right now on our portfolio. One thing I didn't mention, which I think is also very important, we only lend in the first position. So all of our loans are secured by a first lien position on the real estate. The only thing we lend on is first lien real estate, and that's our security interest in the property. So the fund benefits, constant payouts. I've been doing this since 2009. That's 15 plus years. I'm very proud to tell you, we've never missed a payment. We've never paused distributions. We've never stopped paying the interest. We have always paid our distributions. The reason we can do that is because we're profitable. So it is great to do business with people that are profitable. We are profitable, and that profit translates into consistent on-time payments to our investors. Super important to think about, because there's a lot of people out there that are running businesses that aren't profitable. And if you think about the publicly traded companies that have negative profit and they're still out there producing, you're like, well, how does that keep happening? Their value keeps growing. It's a puzzle to me at times, but we are profitable and we continue to deliver and produce returns to you. We do have capital demands, right? So people always ask, well, what does your demand pipeline look like? We get about 350 applications a month. And of those, we're closing right now at about a 9.84% closing ratio. And we're working on improving that, but that number continues to close. So we can close anywhere from 30 to 40 loans in a month. And as a result, we have tons of demand. It's important to note 50% of our loan closings are from repeat customers. That means a customer has already done a loan with us, already paid us off, and is doing another one. So 50% returning customers, 50% new customers. This is for investors who are looking for stability, right? It's a stable, steady Eddy. You're not going to see peaks and valleys. You're just going to see a 10% return. The return comes to you in monthly cash flow. Some people look back in their lifestyles, whether I had a really great email from one of our investors today. Peter just told me he's on, but the email was, hey, I'm thinking about transitioning from making money to retiring, and what should I be thinking about? And the reality is that a lot of our older folks that are part of our investment fund were working, and now they're subsidizing what was their W-2 income or their income. They no longer are having that income, but they're using our fund from money they've accumulated. If they have a $300,000 a year lifestyle, they're investing $3 million and getting $300,000. You can do the math, but high net worth individuals, fortunately, have created very nice lives for themselves. To sustain those without eating into your principal, there is a way to do it. You're here to learn about it. This way works. It's worked for 15 plus years. I'm here to tell you that it will continue to work as we continue to deliver on our execution of issuance of high interest rate loans that come back to us that are all secured by first lien positions. We can continue to pay our investors. It's super simple. It had to be simple because when I started in 2009 with $700,000, I had to figure out how to get more money. And I had to make it simple. I had to be able to have a compelling case to everybody. There's nothing more or less to it. It's super simple. We lend at 15, we borrow from you at 10. It's worth noting, just as a point, in 2023, we paid $4.21 million to our investors. You can see from where it started in 2009 to where we're going. We continue to make payments. We continue to drive results. We are always there to ring the bell at the end of the month, on the last business of the month, to deliver to your returns. So we do, I mentioned a new compounding option. Albert Einstein articulated compounding interest as the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Profound, really I think one of the economic 101 classes that you take somewhere in higher education really digs into compounding interest and the effect of it. You can follow the trends so long as you're part of it for 5 years. You can kind of see what it does. It's material. It does material things for you. You begin earning interest on your interest, which is super powerful. As a note, some people choose to put 100% into compounding. Some can do 30%. Some can do 50%. The discretion is at yours. You have full control of your investment and your discretion, whether it's in compounding or being paid current. We have no objections either way. But I'm very proud of my team in identifying the ability to deliver on compounding interest, and we're doing great there. So what does the consumer-facing side look like? So FStreet.com is our investor portal. That's our investment side of the business. We have a consumer side of the business called the Hard Money Co. thehardmoneyco.com is our consumer-facing side. This is where our applications are brought in. This is where we do all of our business with all of our borrowers. Feel free to take a look at it. Also check out our reviews on Google. You'll see a lot about transparency of the business. We fund a lot of fix and flips. We provide funds for real estate investors to acquire, renovate, and flip homes and refinance the homes. Our loans are all collateralized with the first lien. We only lend in the first lien position, on all of our loans, their entire portfolio. And the maximum loan is limited to 65% of the after repaired value. So we have additional layers of security based on the amount of money we are willing to advance on that property. And the loans, we have about 590 loans over the portfolio. Your portfolio investment is spread across all the loans. So if one loan happens to go into default or goes bad, you won't feel that. You won't even know. We continue to deliver returns. And that is something that really is powerful. If you invest in the business, you're investing in a mature business that has continued pent-up demand and pent-up portfolio. So that portfolio is always running, and you're always part of the diversified portfolio. So how it works, it's pretty simple. I like to keep it simple, as I mentioned. If you make $100,000 investments, you should expect to receive $833.33 at the end of the month, 1/12 of 10%. Our portal will deliver you at the end of the year your tax documents. That is a 1099 INT, which reports your interest. And after your 1-year commitment, so the money is committed for 1 year, it turns into a 90-day two-way call provision. That means that you can call the money back, or we can ask you to return your money to you with 90 days. Providing, once again, a lot of flexibility with the investment. Loan origination key features. This is our features to the consumer side. We charge 15% interest. The term is 6 months, and we charge a 5% origination fee. So this plus this plus this minus the 10%, minus the 10%, minus the 10% is our profit. We're profitable. We continue to deliver our results, and we have to be profitable to be able to do that. You have to have a profitable, sustaining business in order for us to continue to be able to make payments to you. So our business structure works like this. We do our marketing, we underwrite, we process the loans, we originate the loans. We do all of this in-house. We do 100 to 120 repair draws a month. Our team is looking at pictures and finished products and making sure the work is improved to the assets we're lending money on 100 to 120 times a month. We have a complete servicing department, we have a complete collections department, and we've got an REO management system in the event that we take back a property. All of this entire circle is done in Milwaukee, Wisconsin. I welcome you to come to Milwaukee at any time. I'm looking out Past the walls, I can see our entire team. So, S Street's war chest. Everyone always asks, well, what happens? What's the backstop? I've been in these funds. What happens? Let me explain to you what happened. Since 2009, I have only distributed 1/2 of our profits as we ramped up. Today, we have, based on ownership's equity, $11.5 million on our balance sheet that's in front of everybody's investment in the event that we have to use, we have losses. In the event that something goes wrong. I can tell you in the 15 years, we've never had a not profitable month. I've never had to touch in that. Every month that's growing. Every single month, without fail, that month has grown. So we've never taken all that money out. That money is sitting in front of your investment. Our average loan is $156,000. Average. So if you wanted to do the math, if the world came to an end, what would have to happen? We would have to lose on 100 loans. They'd have to go down to 0 to start feeling the pain. It's actually 90, but okay. 87. That has never happened. Not in 15 years. I'm proud of our underwriting. I'm proud of our business. I'm proud of our business model. So, investor testimonial. We've had requests for people to share a little bit about our investors. Most of them have asked to be private. We do have references of investors that have asked, that have been willing to share their information. We have Todd joining us this evening, so we can hear from one of our investors. You got a couple questions first? We're going to take a couple questions, and then Todd will jump right into that. So thank you. Let's hear the questions. So the question is, can the investor alter when it's compounding versus when it's paid current? The answer is yes. We just ask that you be respectful and do it either on the quarter or twice a year. There is paperwork and management that goes into it. If you wanted to do it more often, we'll accommodate you, but it's not a desire of ours. But yes, the answer is absolutely, you can do so. So the question is, can I be an investor and a borrower? The answer is, of course. So to be an investor, you must comply with the 506C, which is a accredited investor. We require all of our investors to be a third-party accreditation, to be third-party accredited, which we pay for and is seamlessly done through our platform. Absolutely. That's not an issue. So the question is, can you invest with an IRA or a Roth IRA, or does it have to be cash, and can it be reinvested automatically? So the answer is, we take investments from all various forms of retirement accounts, 401ks, IRAs, Roth IRAs. They all have to be done through what they call self-directed formats. There's ample companies out there. We use Entrust and Midland, I think, and there's several different custodians that will handle the transaction for you. Yes, if you choose to do that and you want it to automatically be reinvested, you would just select compound, and that would just be automatically invested for you. So absolutely, you can do that. One of the growing portfolios of the world. Why does everyone keep their stuff in 401ks and let the world crash and figure out that my retirement is down now 35% my account because the world just ended? Because something happened that we have no idea what happened. Yes, take control of your IRA, take control of your 401k. Absolutely. We encourage people to do that. Make your investments, control your self-directed. Absolutely, we can have that done. Yeah, so great question. The question is, if we're lending at 15%, why wouldn't somebody just go and get traditional financing? And if you remember my first slide, it was really about the gap in funding, right? So there is a massive discrepancy. If you go to a bank today and you want to go get a loan, good luck. And it's 30, 60, 90 days. By the time they go through everything, it could be longer than that. We can close on a loan in 10 days. We can close on a loan in 5 days. And how do we do that? Because I do everything right here. So I'm not looking for an appraiser to go out in 2 weeks and schedule it when it fits his time between his dog walking and his dinners. We're doing that today. I'm not looking for the title company to wait time. I'm doing that here. We do everything in-house. and we're making sure that everything is buttoned up so that I can close in 5 and 10 days. And that's our competitive advantage. Time is money, right? We know that statement, right? Time equals money. And the reality behind that statement is, in the real estate industry, if you're going to go flip a house and make $50,000, if you came to the Hard Money Co. and you made $40,000 and you could do that 10 more times, would you not take the $400,000 with limited money out of your pocket? Of course you would. And that's why we have 50% repeat customers. So we got a bunch more questions coming in. I love the questions. I love the engagement. We're going to go to Todd for a minute here. Todd Meyer is an investor of F Streets. I want to tell you a little bit about Todd. Todd's review of F Street is available at fstreet.com's Google page. Todd did this on his own. None of our reviews are paid for. This is true statements from real people doing real things. I couldn't be more satisfied. I sleep well at night knowing that my investment is in good hands. F Street is a solid company offering great investment opportunities for those looking to achieve solid returns, diversify their portfolio, and venture into real estate. I met Todd just like I'm going to meet some of you today. I met Todd through one of our advertisements. Todd reached out to us. He got to our investor relations team, and Todd was invited down to have dinner with us and meet us in the office, and Todd took us up on that. Todd is passionate about his career and his life, and Todd is engaged in is engaged as an investor in the compounding private debt fund. Todd served in the Air Force, and we thank him for his services. And Todd is now Todd works at the VA as a doctor. And Todd, thank you for being with us. Thank you for being with us. And Todd, we've got 3 questions that we'd like to ask you. If any investors have other questions for Todd, we can probably set up the time, but I want to be respectful of all your time and then be able to answer other questions. So we've got 3 questions for you, Todd, that we've prompted. Todd, thank you for being here. And the first question, Peter, is, Todd, so I guess, how did you find F Street? How did you find us?
I found you through the internet. It was just, I don't know exactly what ad campaign, but I saw the debt fund being advertised, and I was very interested at the time.
Okay. Thank you for that. And the second question? So Todd, thank you for that. What convinced you to put your hard-earned retirement money with F Street? How did you walk us through a little bit of your experience, and then what made you ultimately make the decision to invest with us?
Well, I'm entering that stage in my life where I'm getting ready to retire, and I was paying investment advisors, 1 to 2% of my portfolio for them to tell me where I should put my money. And of course, getting older, they're saying, like the Bogle rule of being, take your age, and that's how much you should be in bonds, et cetera, et cetera. And I did not want to miss out on any returns in the market. So I did a little bit of math. The average return of the stock market since its inception is actually 10%. So that was the magic number, and I know that I can put my money in the debt fund, get 10%, come to work every day, and everybody's talking about the market up and down, and they're all checking their portfolios. And like I said in my review, I can sleep well at night. I just know that I'm making 10%. It's compounded monthly. So I think some people may have heard about the rule of 7 or the rule of 72. Every 7 years, my entire balance is going to double. And I think a big concern for a lot of people who are retiring is, do they follow that 5% rule about deductions? And I know that you talked about this earlier, Scott. When it comes time to retire, I just expect to take the earnings and leave my principal alone. And so, I will have, like you said, that lifestyle. and just live off of the annual income will be my disbursement when I retire.
Yeah, Todd, thank you for that. And Todd, maybe in closing with our last question is, what solidified the deal for you? What gave you the confidence to make the decision to invest with F Street? I know you looked at several other investments around. I know you did come to visit us, but what really was the closing moment for you that gave you that final confidence to click send the wire, which you did, and make a material investment with us?
I have to admit that Mitch Ferraro, who is a relationship specialist, was very personable, reached out to me right away, had answers to every one of my questions, every one of them. I mean, any question I had. And of course, I was invited down. I got a chance to meet everybody in the back office, basically got to see how the sausage is made. And like I said in my review, very solid. Um, and so, and then moving forward, after I made my investment, Mitch helped me with finding a self-directed IRA. I went with Midland Trust, and they couldn't be nicer. Everything is on autopilot, everything works. I have Mitch's personal number, and for everyone listening, yes, Scott has given me his personal number. If I want to call and ask at any time or text, I can do that. I don't know anybody else who's been willing to do that for me. So that's why I appreciate F Street so much.
Todd, I can't thank you enough for obviously taking the time. Thank you for joining us this evening. And Todd is willing to speak to anybody outside of this call. So thank you for that. We also do have a roster of other references that we're happy to provide. And we welcome you to contact those people to ask their experience with F Street, to give you some comfort in how we operate. Todd's full review, which is a very thoughtful review, once again, is available on Google, along with all of the other reviews that are available. You can read about us and hear all about what other people have thought about us. Todd, once again, thanks for joining us. We appreciate it. And certainly thank you for your service. We got a question? Okay. Sorry. Okay, thank you. And thank you, Todd. So a little bit else about, do we have any other questions, or do we want to jump into the rest of this? We currently anywhere have open loans between 500 and 600 loans. So we have a portfolio between 500 and 600 at any time. Depends on the payoffs versus the new issuance in a given month or a given year. This year has been just a little slower in terms of quantity of loans, but our volume, the dollars out, have been higher. Every year is different, right? Every year is a unique year, but between 500 and 600. So great question. How many of our investors are repeat investors? I hope all of them are. And I mean this truly when I say the money tree. So we have a wide variety of offerings. We have a private debt fund that fits a lot of people's visions. It's the entrance point for a lot of people into making an investment. Most of our investors invest across all of our platform. And most of our investors start with X dollars and they end up with Y dollars by adding more. We have a 95% retention rate. And most investors continue to add. The reason that people take money out of the fund is for life events, buying homes, college for somebody, some large purchases are happening. Some people need finances. We deal with high net worth individuals. So traditionally, they're not investing their last dollar. They're investing their investment dollars, and these investment dollars are intended to work for them. And so we see them investing all over the platform, and we have a very, very high rate of repeat investors. Yeah, so the question, it's a great question. The question is, how much in the debt fund is taken without being invested right away? I answer that question a little differently, so bear with me. The way that we do this is we have a $50 million credit facility with CIT Northbridge. And so when we take in investment dollars from folks like yourself, what I do is I immediately pay down the credit line. So we have a sweep vehicle that pays down our credit line and gives us availability. And that's how we manage. So we always are being optimal and maximizing our P&L. So we float and fluctuate through our credit facility, which keeps us very efficient. Sure. Thank you for those questions. If you have any other questions, feel free to throw them in the chat. We'll continue to get to them. I'm going to run through a few of our other alternative investment opportunities. And when people think about these, beyond the 10% return, we always tell people, let's plant these money trees and let's continue to make investments in real estate. Real estate is the most powerful opportunity in the world to invest in. There are more millionaires and billionaires being created out of real estate than anywhere else. And maybe someone would argue other crypto vices, but those are not real at this point, so who knows? We do have an offering right now at Summit. Summit is F Street OCLV2. This is our second round at Oak Creek. We have $6.45 million to raise. We've already raised $5.6 million of it, leaving just $1 million left for our Class A investors. So if you're interested in investing, click the button tonight, because most likely by the end of next week, we're going to be fully invested. We have, as I said, 6.45. We've already committed 5.6 million. This is in really Class A real estate. This is Class A area on the lake shores of Lake Michigan in Wisconsin, in a growing suburb. There is high demand to be part of this investment. And this is phase 2. Our phase 1 already leased out in 8 months ahead of schedule. 199 units, 8 months ahead of schedule. So that's why we're rushing to get phase 2 done, so we can get in the ground and get it leased. We're projecting an 18.28% IRR and a 7.7% yield on cost, with an equity multiplier of 1.75 times. And that is based, all of this is based on a 4-year hold and a refinance in 24 months. At the refinance point, we anticipate in 24 months giving you back 25 to 30% of your investment right away. The investment earns a preferred return. Your money is working and it is earning an 8% preferred return. So phase construction, we're reducing the project scope to just 74 units, so we can get it in the ground and build in 12 months instead of 16. Our interest reserve has gone down with rates dropping right now. We're almost in the mid 6s locking on our construction loan for the period of time. And we're focused on stabilizing this in a 4 to 6 month period. Demand to live at Lakeshore Commons remains high. So let's talk a little bit about the investor, Class A. That would be you, the investor. It's an 8% preferred return, as I mentioned. Here's a nice thing, okay? We participate at 35% and you get 65%, but I do not participate. I don't make a dollar. I don't do anything until you have 100%, read this carefully, 100% of all of your money back plus your preferred return. Think about it. We do not do anything. I don't get $1 until you get 100% of your investment back plus your 8% preferred return. Then when I do that, each dollar is split 65 to you, 35 to us. So I got to work and make sure that this project is successful and stable and you have all your money back before we touch a dollar. Think about that. Where are we aligned? Perfectly together. So the business plan, here's a little bit about Oak Creek. This is the 66-acre development. This is its totality. This is already built. This is coast. This is the 199 units. This is 95% occupied. We just made our first distribution this week. It'll actually be out tomorrow. We're making our first distribution way ahead of schedule. This is under construction right here. This is 28 townhomes, and Summit is being built right here. 74 units. Right here is Lake Michigan. That's the lake. Beautiful, beautiful Lake Michigan. Construction time, 74 units of mid-rise Class A apartments. This is real estate you want to have in your portfolio. This is a great money tree. Our partners, Stevens Construction, Harmonic Residential, and Rinka. All of these parties, except Harmonic, because they're a management company, are invested in this project with real cash. So the question is, does Lakeshore pay out any money, or do I have to wait till it's sold? And is it an equity deal? The answer is yes, it's an equity deal. You earn, well, it's not in here. You have the Class A, which is you, owns 65% of the equity in the deal. You get your 8% preferred return. I can't pay it while I'm building it, but I can pay it once it's stable, and we will start distributing cash as soon as we can. On the other deal, Coast, we've already just made our first distribution. Once it is stable, we will refinance. You'll get 25 to 30% of your investment back right away in 24 months, plus your preferred return. Then you'll continue to get checks while the cash flow continues to produce, as well as once we go and sell or refinance. So you're a partner with us the moment you make your investment. Your equity is always your equity. It never gets traded out. Yeah, so the question is, what is the rent range? The rent range is, so we use Coast right here as the market, and we're using very similar to rents over here. They range from, they're in the low $2s, $2 a foot. All of the revenue is, which includes the bundled internet, which includes the parking, is all bundled into the value add of the total return. So we break this down into total value. There's no additional opportunity for revenue. It's all baked into what we're bringing together in terms of the projected returns of all of our line items of income and then expenses. And the other question is, and there is no other additional income. There is none at that point. Yeah. So we in the offering memorandum that's on fstreet.com, there is a complete detailed table of all of the cash flow and how it's split. But here's your answer in layman's terms, without getting too technical. If you put $100,000 in, you are owed 8% on that money each year, and until the 100,000 plus the 8% each year is repaid to you, all of the cash, 100% of the free cash flow goes to the investors. 100%. After that, 65% goes to the investors and 35% comes to the sponsor. All right, great questions. Village 43, we just finished this funding. This was a funding deal. We raised 11.1 million on. We just raised our last $50,000 yesterday, and construction started September 4th. 156 units, Class A, multifamily, garden style. 1031 exchanges. If any of you are involved in exchanges and are looking for someone to help you support your exchange, we do 1031 exchange partnerships with partner families. We do successfully all the time. A 1031 is named after the section 1031 in the IRS code, and it's basically a like-kind exchange. If you own a piece of investment real estate, you can sell it and exchange it and defer the taxes under the like-kind rules. We have a tailored solution for people with 1031s. We work with partner families all the time to do these. We've had great success with these. Families really enjoy at the point when they're either retiring or getting out of the real estate industry. They want to maintain the benefits and not have a huge tax implication. They want us to step in and help them. We help tremendously under the 1031 tailored solutions. And so, guys, one thing I'm also very proud of is our portal. Our investment portal is amazing. All of your information, should you make all of your investments, is held at fstreet.com. This is what your portal will look like. You've got your investments, your capital return, your equity balance. You have your investments. You have your tax documents, any offerings. You can make an investment right now by clicking Invest Now. If you just click that button and you're accredited, you can start making an investment. And tomorrow you'll be invested in MF2. You got $1 million left to invest in that. That's great. If you want to invest in your future, you can schedule a 30-minute call. We take these every single day. Our investment relations team's available. I'm available Todd is not lying. I will talk. I will give you my cell phone. We will talk. Todd can call me. We speak. We want to speak to you. Investing is great. Most people make all of their money and then they stick their head in the sand when it comes to investing their money. The rich are eyes wide open with their money, investing in and avoiding taxes. This is a great opportunity to do so. So we do require everyone to be accredited. We do advertise under the 506C. You do need to get accredited. It's free. We pay for it. It's a free part of the business, but you do have to be accredited. If you have any questions about accreditation, we can absolutely help you through that. Let's invest together. I'm very passionate about investing in alternative investments to real estate. It has changed my life since I started in 2003 with a few nickels in my hand and a bunch of energy to go do something. I hope you, as a high net worth individual, are focused on your future. Let your money make you money. And by the time you wake up and stick your head out of the sand in 10 years, you'll say to yourself, thank God I did so. So I appreciate it. Are there any other questions for us, Peter? So the question is, when does Summit close? We should complete the capital raise by next Friday, if not sooner. And our loan is scheduled to close no later than October 24th. I've already given our contractor, Stevens, a limited notice to proceed. So we've already started the construction process, which is basically buying the switchgear, which is still somehow on massive back order. So we already are moving forward with that. The question is, as an investor, is there any way to recapture any of the depreciation? Absolutely. We do a cost segregation study on any value add properties, and we also do a 179D on new products. Absolutely. We want you to pay no tax because you have more money to invest with F Street. It's so simple. And you feel better about yourself, right? Who feels great about making more investments with dollars that normally would have been donkeyed away to the government? Me. All of us should. So we absolutely do cost segregation studies. We absolutely do 179Ds. We give you all of the benefit. You're a passive investor. You get all of your passive losses, and we are super proud to deliver those. Scott, the question is, am I the only principal in the firm? The answer is I am not. I am the founder. I am the managing member of all of our investments. I do have partners. My cousin who joined me 6 years ago, Josh Lurie, is a partner. We do have a few other minority partners in our transactions of employees that are vested in what we're doing. Yep. So the answer is, do we get audited? The answer is, I say unfortunately, yes, but yes. The audit process happens. We do have a credit facility with a large institution. They do require us to have an annual audit. It's, as you can imagine, like anything else, a rigorous process. We do also have 2 field exams that are done each year by our lender. So they are out here managing our process, and absolutely we get audited. And we do a great job there. Just our books are very clean and transparent. Yeah, we certainly have that discussion. We will require an NDA and a discussion, but if you would like to see them, you absolutely have that right. It's part of the offering memorandum, and once you're accredited, we will have you sign a non-disclosure agreement, and we'll absolutely provide.
For that.
So the answer is it ordinary income? I'm not a tax accountant. We deliver you a 1099 INT that will be claimed as income on your personal tax return. Yes, if you do have a vehicle like a 401k or an IRA, it's tax deferred. There's nothing better than it. So make that investment for sure. But that's up to you. But taxes are part of, I guess, what do they say? Death and taxes are the 2 guarantees in life. Or maybe I'm saying that wrong. But anyways, yes, it is a 1099 INT. All right, guys, that was a wonderful 45 minutes. For those of you that are not in Milwaukee, the Brewers are playing the Mets. I'd like everyone to just root for the Brew Crew. It'd be great to wrap up this series after a slow start. It's 1-1. And we're here in Milwaukee playing the Mets tonight. So go Brewers. And I want to thank you all for your time. I know that you have a lot of choices in life. Spending time engaging and learning about your future is so powerful to me because there should be 1 million people on our webinars, but there's, call it a couple dozen that join us every time we do this, and we meet really great people that are really focused on it. I want to really thank Todd for spending some time with us this evening. Todd, it's great to get to know Todd. Todd's a new friend of F Street's. Todd made a material investment with us, and Todd's review, which I encourage you to read, really is the reason why I do all of this and makes me feel really great about who we are at F Street. So we're transparent. We like to truly be one with our investors and our community and our entire portfolio. And we are really excited about the opportunity to meet new investors. So thank you for being part of our webinar. If you have any other questions, you can always reach me, Scott@fstreet.com. I promise you I will respond. You can always reach out to Mitch or our investment relations team if you have any other questions I have not answered for you this evening. So the question is, there's one other question, does the debt fund qualify for accelerated depreciation? The answer is it does not. All right, guys, we're going to wrap up here. I want to thank you for your time. I'm grateful, as I said. Thank you for joining us. If you have anything for F Street, find us at fstreet.com. And thank you all for being here this evening. It's great to be with you. Thank you.